And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever the world you're watching from, it's Business Morning live on Channels Television. Great to have you join us. Let's kick off your morning now with the global commodities markets. Now, starting with oil prices there, we see it fell more than $2 a barrel today. A big drop there was seen this Monday morning with WTI hitting an 11-month low as protests in top importer China over strict COVID-19 curbs fuel demand concerns. We see Brent there drop about $2.16 to trade at $81.47 a barrel in early trade after diving to $81.16 earlier in the session. That's its lowest since January 11th. We see now that the U.S. WTI intermediate crude futures slid about $2.08 to $74.20 a barrel. It fell as far as $73.82 earlier. That's its lowest since December 27th, 2021. Both benchmarks would hit 10-month lows last week, have posted 3 consecutive weekly declines, and Brent ended latest week down 4.6%, while WTI fell about 4.7%. And now to the grain market. We see Chicago wheat slid around 1.5% today. It's lowest in 3 months, with supplies from the Black Sea region and rare protests in China against the country's strict zero-COVID policy weighing on markets. Soybeans and corn both lost ground. The most active wheat contract on the Chicago Board of Trade was down 1.5% at $7.85 for a bushel, after hitting its lowest since August 26. That's $7.84 earlier in the session. The wheat market is being pressured by supplies from the Black Sea region, which are giving stiff competition to U.S. exports. And investors' confidence is one of the key ingredients that will accelerate the growth of the country's capital market. This was made known by the Minister of Finance, Budget and National Planning, Zainab Ahmed, at the launch of the revised Capital Market Master Plan at the 3rd Capital Market meeting in Lagos. Finance Minister was represented by the Director General of the Debt and Management Office, Patience Ania. It says the master plan is focused on driving initiatives that the revised plan is a tool to drive the country's economic growth objectives. Take a listen.
The implementation of the master plan is one of the key initiatives in the 40 deliverables of the Federal Ministry of Finance, Budget and National Planning to His Excellency, Mr. President. This underscores the fact that capital market growth resonates with this administration's unwavering commitment to deepening and repositioning the financial market as a key anchor to achieving the private sector-led development of our economy as envisaged in the National Development Plan objectives. The master plan, which represents the collective aspirations of the capital market community, is focused on driving initiatives geared towards growing and deepening the market with the ultimate goal of accelerating the emergence of our country in the top 20 global economies by the year 2025.
Now to our first conversation. According to the Debt Management Office, Nigeria's domestic debt stock as of June 30th, 2022, stood at 26.23 trillion. And external debt at 16.61 trillion naira. The federal government of the Nigerian state, 36 state governments, and the Federal Capital Territory also part of that debt number was seen there. Well, to discuss the debt issue and funding for state government budgets, we have Mr. Samuel Egube, Commissioner for Economic Planning and Budget, Lagos State. Great to have you on the program. Good morning.
Good morning, Ladi. How are you? Good morning. Nice to have you.
Nice to have you. So it's all about debt, right now, debt issues, with the federal government and state governments. And looking at that, it's about 42 trillion there. And concerns are beginning to mount, about this debt issue. How are you seeing it, and should Nigerians be worried?
Well, debt, as you know, it is not a problem in itself. It is the management of debt within sustainability levels that make people get concerned. So it's not the size of the debt, it's the way the debt is structured, is the pressure that the debt burden would put on your fiscal position that begin to cause people to have concerns. Now, if you manage your debt profile around basic sustainability limits, like you see a lot in Lagos, then debt becomes okay, because in a high inflationary environment, you need to take some of your capital spend upfront and create a system where you not allow cost overrun your spend. So borrowing is good if it is used properly, if it is used specifically in a manner that strengthens your capital expenditure, which really technically should improve the revenues that come back to state. So I think we all should just focus on staying within our sustainability levels and see how our revenue profile is able to just sustain and service the debt.
And looking at the indebted states, that we see Lagos State tops, that list, of highly indebted states in the country. What would you say, most of these funds have been spent on in Lagos?
Okay, so even though Lagos tops, you will find out that we front-loaded quite a bit of our projects. You will see that we are constantly working within our sustainability limits. Our debt profile to our debt service requirements to our revenue levels is still within 30%, and therefore we have significant amount of room. A lot of these debts are used to service and procure capital expenditure. And the reason why we've done so well, you see that Fitch, having looked at our sustainability, has upgraded us to AAA. It's a lot of work to stay at AAA in a period where a lot of other economies are being downgraded. This same high rating has been reaffirmed again by Fitch. So Lagos has a very strong hold on its sustainability frameworks to just ensure that we drive the Lagos economy within borrowings that are sustainable.
And looking at the budget for 2023, there is quite a big deficit there, and obviously I'm guessing there's going to be more borrowing to offset that.
Well, we will continue to borrow at reasonable levels as long as our sustainability measures are met and captured. And if you look at our development plan, for example, it is clear that the way that plan will be supported will have a big bit of private sector participation in addition to funding coming from state. So the plan is not supposed to be implemented purely on the back of the state. But yes, there is some borrowing, but you will see that there's a lot of moderation. The borrowing for this year, as proposed to the House of Assembly, is significantly less than what we did last year, because we saw the inflation coming and we took a proactive decision in the last year, in the current year's budget, right, to front load a lot of our projects. So you see that moderated downward in about 300 or 350 billion that you see us propose to the House of Assembly for the 2023 budget.
All right, let's talk about the 30-year Lagos State Development Plan now. It's quite a big document. If you were to summarize it, break it down for us.
So it's a document that holds the aspiration of the people of Lagos. It is not just it's not a Lagos state government plan. It's a Lagos development plan. And the people of Lagos have built a consensus around defining their vision, which is to become Africa's model mega city, a global economic and financial hub that is safe, that is secure, and that is also functional and productive. So it's around that we have built the development plan. And yes, it has over 400 initiatives that convinces us that we will be able to achieve that plan. But it is organized around 4 basic buckets. One is that the aspiration of Lagos being a thriving economy, that we would have a robust, healthy, and growing economy with adequate jobs, because jobs are important, and strategic investment to sustain that growth. Then you have the human-centric city bucket, where our aspiration is for every Lagosian to be able to access affordable and world-class education and healthcare services. The idea is that Lagos should become tops when it comes to health tourism in the continent. The fourth is about modern infrastructure, that this growth, right, will be supported by reliable and sufficient infrastructure that meets the needs of the 21st century. And the last, which you cannot will away, is the fact that we must drive effective governance. In other words, we're able to give the people of Lagos opportunity to see the supportive nature of government. So under thriving economy, you have about 162 initiatives. Under the human-centric city bucket, you have 69 initiatives. And then under modern infrastructure, you have 90 initiatives, while under effective governance, you have 116. The idea is that if the people of Lagos do own this budget, and with very clear objectives and targets, we will be able to drive it like we usually do in Lagos.
Well, what would you say is the primary target of this plan?
So the plan really is to galvanize the people of Lagos and rally them around a clear set of objectives, a clear set of initiatives. It's like writing the vision on the table and making it clear so that everyone who reads it will be able to run with it. There are 6 clear targets in terms of very big bucket targets. We want the GDP to grow tenfold from about $100 billion today to about $100 billion to about $1 trillion, right, in 30 years' time. But we want it to also percolate to the prosperity of the people. So we have a target for the GDP per capita to go up 5 times from $4,800 to $20,000. But that does not leave out issues around human development indices and livability indices, where we want us to move from 0.65 to about 0.8, in line with leading cities around the world. On the livability side, we are currently about 31.2 as measured by the Economics Intelligence Unit. We want to go beyond 55. We also are looking at the revenue side, because revenue is at the heart of development. If you do not generate enough revenue to support your development, your economic activities will destroy your infrastructure. Today, we're at 1.9%. When you look at your internally generated revenue to GDP, we want to take it up to 5%. So that is the broad set of targets that we have. But as we prioritize them, you begin to see that there are objectives around each bucket as we go.
And we did get that report from the MBS that 133 million Nigerians are multidimensionally, poor at this time. What's the plan to reduce the number coming from Lagos State?
Well, it will go around what we are doing already around education, what we are doing around our healthcare services, and what we are doing with the vulnerable. Around education, we are expanding the way we develop our people, right all the way from primary school, where we deploy devices that make our children age-ready, able to read at the appropriate age levels. We are also employing significant amount of teachers to just ensure that the teacher ratio is right. We're expanding the infrastructure to ensure that the environment and the ambience for learning is also strong. And we are seeing the results in the pass rate, as we are seeing it improve significantly. In 2020, pass rate was about 39%. By 2021, we've moved it up to about 80%. So all of these things are working. You can see the amount of work going on the infrastructure side on our healthcare systems. But you also see what we are doing with our healthcare personnel to ensure that the welfare of our doctors and our other healthcare practitioners are strong. To basically situate Lagos as that place for medical tourism. And then you see what we are doing in the infrastructure side. With the Lekki Deep Sea Port will come alive, and all the employment that will come with it. The Motor Rice Mill will come alive, and everything that will come along with it. In addition to roads and the rail that are coming up to basically improve the productivity of our people. Once the productivity of our people improves, then you begin to see that poverty is being pushed backward. It's the reason why you see that Lagos still leads Nigeria when it comes to that index. But our goal is not for Nigeria. Our goal is to stay with leading peers around the world and to begin to lead the African continent at that.
Well, in terms of priorities, how have you, prioritized the action, under the LSDP plan?
So under the thriving economy bucket, it is clear that you cannot do every sector. So what we have done, we've prioritized eight sectors basically, which we have which is the wholesale and retail trade, food and beverage manufacturing. We also believe shipping and logistics should be great. So when you see what we did in the Lekki Deep Sea Port, it will increase the capacity of Lagos by almost 3 times, positioning us as top leading shipping and logistics position in West Africa, and we'll be able to control over 50% of that business in the West African continent. We also have financial services, the real estate sector. We have arts and entertainment, and that's why we flagged off the media and the film city at Ekpe, which we're building. But you cannot remove building the tech ecosystem as a backbone. So you can see 3,000 kilometers of backbone fiber optic dock, which we are doing all over the metropolis. And then we are trying to grow our SMEs to over 10% contribution in the GDP. So the idea is to see ourselves with leading emerging cities around the world. When you then look at the prioritization on the human-centric city, it's basically around education, healthcare, housing, safety, and security, right? And the idea on healthcare is to guarantee high quality and affordable healthcare and to push us as top five medical tourism destinations in Africa. On the infrastructure side, we need to create new urban cities. We need to develop further the east side and the west side, right? And to build our capabilities in that area. And of course, all of these things, the deep sea port, the film city, the food security systems and logistic base that we are flagging up on all of those sides. And then the red and the blue line coming on the west side, and the proposed green line from Marina to the deep sea port are infrastructure that we intend to basically drive. And then in the effective governance side, it has to do with digital transformation, revenue diversification, and investment attraction. It's our view that with these priorities, as we drive it together with the people of Lagos, we believe that the development plan is within sight as we implement it on a stage-by-stage basis, near-term, medium-term, long-term aspirations. We then see that we organize our minds better to execute very precisely on the development plan.
I would see, at this time, businesses are going through a lot, from rising energy costs. We're seeing inflation, sky high, and obviously production, is getting more expensive. What's the plan to, support this segment of society?
Well, the issue is a global, I like to call it a pandemic. I mean, we face different kinds of pandemic, but it's a global, there are all kinds of issues coming against the Nigerian environment from abroad, the Ukraine war, COVID itself, and the tailwinds of what COVID has done. Lagos is not immune to that. But basically, as we continue to do what we're doing, as we continue to strengthen our infrastructure, it will bring down the cost of doing business. As we continue to improve on our ease of doing business, the cost and the turnaround of doing business in Lagos will continue to get better. As we continue to train our people, what you then find out that the cost, the human capital cost, right, on the business, this is quite high, because when you look at the turnaround of those people and the level of production which they deliver, speaks a lot as to how much improvement that we must bring to the education sector. And that is why you see Lagos consolidate our tertiary education system. So we have 2 new tertiary education systems, the University of Education and also the University of Science and Technology. The idea is to train teachers and train educationists so that people do not just know physics, but they must also learn how to teach physics and to get better outcome from our students. But also, technology is becoming a very strong anchor to leapfrog the economy. And therefore, we focus also on the University of Technology. Not to take away from the health situation, So if the people are healthy, then they are likely to be productive. So we focus a lot in our investment in the healthcare services, in expanding the infrastructure, but also to expanding the people's capability to pay for healthcare through our Ilera Eco Health Insurance Scheme. And then we're building up systems that make the entire healthcare system sustainable and is able to pay for itself as a result of capitation and the things that come from the health management system. So we believe with all of that, as we continue to work at it, there's no easy path to this. It's just that we have an informed path, we have a disciplined path. Our risk level as Lagos is still low at AAA. We're able to then attract investment, and the quality of people that run the government just ensures that we continue to drive and deliver the aspirations that we have all set for ourselves.
All right, we'll keep tracking the plans and also tracking action coming from the state government there. Thank you so much. That was Mr. Samuel Igwe, Commissioner for Economic Planning and Budget, Lagos State. It was great having your perspective.
Thank you very much, Ladi.
Welcome back now to our next conversation. Let's talk food. According to the National Bureau of Statistics, Nigeria spent a whopping 464.5 billion naira in the first 6 months of the year to import food products. Value of food imports in the second quarter of 2022 stood at 464.45 billion naira, showing an increase when compared to the value recorded in the first quarter of 2022. That was about 443.36 billion naira. Let's talk to Alexander Nwokolo now, CEO, Barons and Queens Trading Enterprise Limited. Join us via Zoom. Great to have you on the program.
Yeah, thank you, Ladi.
Yeah, so quite a big number, 464.5 billion naira, and this is coming at a time, when households are squeezed, for incomes. How do you see this data?
It is very alarming, and it also shows Nigeria itself as a country is not yet sufficient enough to feed our citizens, and it has also weakened our foreign exchange reserves too, because if we continue to import at these rates, we won't be able to sustain ourselves as a nation.
And what do you think is responsible for this massive imports we're getting at this time?
Yes, in my own opinion, the major reason is insecurity. Basically, all the raw materials we need for production can be sourced locally in our country, but the insecurity level has made farmers afraid to go to the field, to go to the farm, And I will give you practical examples. There are cases where, some group of people will demand money from farmers, before the planting season. Some group of people too will also demand money during harvest. And even when buyers go to the market to buy in bulk, you will still meet this group of people, demanding money before you can even load. So these are scare farmers away from even farming. Then we can also attribute this to not only insecurity, but also corruption. Yes. Those are just the two major issues. We have insecurity, we have corruption, especially insecurity, especially in the north, where we have bulk of these farm produce that is capable of feeding the nation. Yeah.
And another issue, obviously, is the rising cost of the farm inputs. That we see fertilizer prices, at sky high. It's actually sky high now. Talking about fertilizer prices, what do you think is the solution to this, price issue for farm inputs?
The solution is we should be able to produce, if the environment is conducive enough for farmers, for serious-minded business people, you know, if the insecurity is being dealt with at the roots, you know, not just throwing sentiments around it, but if it is properly dealt with, because the agriculture eco space is sufficient enough to lift people out of poverty. You know, the agricultural eco space is sufficient enough to even create a middle class in rural areas. You know, not everybody would be looking for white-collar jobs or be going to the city. The agricultural eco space is enough to even make millionaires in the villages, to make millionaires in rural areas, you know. And that's just the way to go. We need to deal with insecurity. We need to deal with corporate bottlenecks. We need to deal with largely insecurity and corruption. So it would also encourage people to see agriculture as a business, not just a way of life, but to see it as a profitable venture and worth investing into.
All right, let's look at these prices now. What other options are available, you know, to farmers with this, you know, rising prices of fertilizers?
You know, in my own opinion, the options available are, if the government could also intercede, you know, if we could also encourage local production, you know, and even though we have local production of fertilizers, you know, foreign exchange, the FX itself is rising up, so the cost of production is very high. And there is no how it won't also affect the product. It won't also affect fertilizers and other farm implements. You know, largely we import raw materials and into the country. Not only just that, also makes the prices of goods and commodities also go up, because when you pay high on importation, it will also affect your finished goods. It will also affect your products, and yeah.
All right. Obviously, right now it's time to actually be looking to boost, you know, exports at this time. Even though we still need to feed the people we have here, what do you think are the best plans now to get us exporting more?
Yeah. The best plans is to develop our local base. For example, if you look at the products that are being imported into the country, they are products that we can actually produce in Nigeria. For example, if you look at the figures, it's very alarming. Wheat as a grain also is one of the highest, if not 3/4 of what is imported in the country. You understand? I think about this year, 1.67 million metric tons of wheat was also imported into the country. And this is a raw material that we can actually produce in Nigeria. But, you know, the insecurity in the north, especially, where these wheat is being grown, has affected farmers' ability to go to the farm. You see, there are people with large expanse of land, large hectares of land, but they cannot farm because of the conditions, the insecurity condition, and, you know, the terms that has to be met before they farm, and the high cost of farm implements. You know, what the government could do is to tackle insecurity. We have the best policies in terms of agriculture policies, fiscal policies, long-term goals, but, you know, a nation that is not secured cannot feed itself. A nation that is not secured cannot even encourage people to produce. And there is a direct link between farming and production. Once farmers cannot farm, then feed producers and agro producers will be forced to import, and it will also increase our import bill too.
Well, like we're already seeing right now with that data. But you're a player, you know, in this agricultural value chain. What other, opportunities or new, trends are coming up, within that value chain right now?
Yes, the new trend is like what we do and what we've been doing in the past is we try to finance farmers. We create a system where we go into business with farmers of host communities. We finance them, we give them farm inputs and all those stuff. Then we partner with them in terms. Then we take charge of the products we sell to. Then we also trade in commodities. But you see, the major challenge we have, apart from insecurity, is also logistics. Most of these trucks and everything runs on diesel. Most of moving goods from one point to the other also runs on diesel. So, all these also add to the cost of production at the final stage. So the thing the government can do first is just to tackle insecurity, because it is worrisome. You will get to some communities and farmers will complain even after you've given them money, after you finance them, they cannot go to the field because they are being attacked, and if they are not attacked, then they would also give you reasons why some people are also demanding money for them to farm. It is very worrisome, and nobody is talking about it. Nobody is really looking into it, because you can't be in a community where you see that it is going to be for the progress and for the benefit of that community, and you are also threatening your brother, your tribal man, to pay you, you understand, before they can even farm, before they can harvest. And it also scares, agro investors in investing in agriculture, because of the insecurity in these regions. And these regions they have the best lands, the best arable lands. They have the best fertile lands for grains, for the cultivation of grains that can even feed the nation, by the time we begin to produce locally, we begin to farm, we begin to develop our own agro ecospace, we begin to feed ourselves, then we can now say we are sufficient enough to export. But for now, we cannot feed ourselves because we are importing raw materials that are supposed to be produced locally, raw materials like wheat, raw materials like sometimes even grains too, because anytime there is shortage, we will have no choice than to resort to imports too. But these can be mitigated if there is security, if there is some level of security, and if security is also tackled, at the roots. And this will also encourage farmers to actually farm, encourage farmers to actually work, and it will also have a direct effect on production.
All right, thank you so much. That was Alexander Wakolo, the CEO of Barons and Queens Trading Enterprise, giving us his perspective there on solving the food imports issue. Thank you so much for coming on the program.
Thank you, Ladi.
All right, from food now, let's move to the markets. We have Anita there to bring us the details. Anita, good morning.
Good morning,
quite an outing last week talking about the equities market.
And it really came as a surprise. As a matter of fact, I would say that no, don't discard my crystal ball. It's always correct. Yeah. But it defied.
It got blurry last week.
Yes. It even defied the analysts that we had on BizInc. It also defied its own projections, because the market just, like I always mention, always have a mind of its own.
Right.
So, but I don't see that coming into this week.
Oh, okay, another projection. All right, exactly. We'll see how that goes.
Yeah, well, although we'll talk about the equities market. For now, let's talk about the Forex market first. And this is how it turned out for the end of last week, 25th of November. The market was all positive, as you can see on the board there. Total transactions carried out at the Forex markets of the FMDQ exchange, 47.31%. That's how it turned out for the Forex market. We saw more of an increase in Forex transactions there. When you take a look at the board, the futures side, this future segment had the highest 368.38%, followed by the FX derivatives market. So that's why you see that market having the 47.31% increase. Now let's move over to the investors and exporters windows. That one was also up by 19.33%. This is the total value, $552.76 million. Over to the NAFEX rate, the Naira, it was, well, actually the Naira was, it improved, it declined rather, in contrast to what we had the previous week. 444 Naira 53 kobo, in contrast to 444 Naira 42 kobo. Now, we will be talking about the fixed income market with our guest on the program, but before we take a look at that, let's look at the fixed income market. How did it turn out last week? For the fixed income market, at the Treasury bills market, it was a very rather quiet run because the market, investors had switched to the Treasury bills primary market auction by the central bank. So that also had an effect on that market. Over to the bond space, it closed on a mixed note, but albeit with a bearish bias, and that's because investors were influenced by the repricing of bonds, which was repriced upwards in reaction to the 100 basis points hike by the central bank's monetary policy committee meeting last week that they had. The central bank, they had the monetary policy committee meeting where they hiked the benchmark interest rate from 15.5% to 16.5%. So that's how it affected that market. We saw the average yield there had increased at the short end by 5 basis points. At the long end, it was up by 6 basis points. That's because investors took profit off the April 2023 as well as the January 2042 paper. So that's how that market turned out. So now let's talk to Bolade Agbola, investment research analyst at Meristem Securities. Thank you for joining us, Bolade.
Thank you. Good morning.
Okay. Now, can you talk us through the activities for last week, the final week of November, and then we have just 3 days remaining in November. So tell us, review the market just within just 1 minute, and then what to expect this week.
All right, thank you very much. Last week, the equities market closed up by 6.99% week on week, improving the year-to-date return to 11.3%. The movement on bellwether stocks such as Excel, MTN, Dansem, including Nigerian breweries, NB, drove the market to positive zone. And we note that the bonus issue issued disclosed by Nigerian breweries is also one of the things investors took note of and decided to position on the ticker. On a sectorial basis, we saw that all sectors closed off week on week, except for the NGX oil and gas index, which lost 1.29%.
Okay, Bolade, can you hear me?
Yes, I can hear you.
Okay, now I'm sure if you take a look at your survey or your reports, we gained about 1.7 trillion naira gain in just 3 days within the market, and the market has been up by 8.5% month to date. Year to date, we're at 11.3%. Now, do you see this being sustained in the week, in the final the last 3 days of November, and then into the first few days of December?
Yes, I expect that the market will close up this week. There's been improved optimism in the market, although we are still in a bearish market. But even in a bearish market, there are still weeks that the markets will close up. And looking at most of these tickers that are really at low valuation, we expect that this will be very attractive to investors, and there's room for bargain hunting. Also, Dansem disclosed a share buyback, and this poses an opportunity for investors to position, to be able to participate in it. And this we expect would move the market to the positive zone this week.
Okay, thank you for your time on our program, Bola Bola. We'll keep our eyes on the market as the activities proceed at the NGX. So, Ladi, well, I think that's a different version of my own prediction.
Yeah, she sees a green coming. With,
she sees the green, but I see the reds.
You see the reds. All right.
Exactly, because they also rally in the market last week.
Okay, we'll keep watching. Thank you so much, Anita.
Pleasure.
And in the UK, still about rising energy costs there as consumers struggle to meet up with those needs. Let's talk to Juliana now, right there from UK. Great to have you, Juliana. So I saw a report showing that Britons have cut their gas and electricity use by more than 10% since October. I guess it's evidence of changing household habits at this time.
Good morning, Ladi. You're absolutely right. I think for millions of people across this country at the moment, turning on your heater, even when it's exceptionally cold, does feel like a luxury, and that's because over the past couple of months, of course, energy bills and rising energy bills and how we're going to tackle it in this country has been on the top of government agenda. In fact, in the next couple of weeks, the Rishi Sunak's government are going to be launching a £25 million advertorial campaign trying to advise consumers on ways that they can reduce their energy bills, certain times when they shouldn't be putting their gas and electricity on, how they can be buying some energy-saving produce over the Christmas period. But it does appear as if people are using their common sense right now. Of course, we do hope that those who are particularly elderly or vulnerable are keeping the heating on. You know, don't turn it on if you are extremely cold. But it does appear as if that's what's happening. And this is data released by two big energy suppliers here in the UK, I believe Total Energies and as well as E.ON. They've been looking at bills and they're seeing that people are reducing it. So what's happened now is that the new business secretary, Grant Shapps, he was the former transport secretary, he's written an open letter this morning to all of the CEOs looking after energy companies in the UK saying, look, act accordingly. There is an energy price guarantee, but if you are seeing that your customer or a particular household is reducing their usage, then you should be reducing their direct debits and not trying to jump through a loophole to make more money. But we shall wait and see.
Yeah, definitely. We'll wait and see. All right, it's a new week. What market moving data are we expecting?
Okay, yes, it is a new week. End of November, we're going into that all-important month, December, where retailers, beleaguered retailers, shall I say, are hoping that they'll be able to claw back some of their lost earnings. Big one, of course, it's got to be Cyber Monday, which is today. Despite the cost of living crisis and the fact that inflation has reached a 41-year high, we are expecting billions to be spent today. People trying to get some extra super savings before Christmas. Black Friday was Friday, according to Nationwide and Barclaycard. Barclaycard actually go through more than a third of all transactions in the UK. So anytime they want to look at data, we go to Barclaycard. They were showing that sales were up on Friday, 9% higher than they were this time last year. So people are still spending. However, it does show that lots of people are spending on their credit cards. So lots of consumer watchdogs are advising people not to rack up more debt. If you cannot afford the product, it's just not worth buying.
Yeah, even if it's 80% down, if you can't afford it, just leave it, I guess. All right, Juliana, thank you so much. Yeah. See you later.
Thank you. See you later.
All right, now let's look at what's happening in other markets now. We'll see the crypto market looking quite down this morning, this Monday morning there. We'll see Bitcoin there attempted some upside break above the 16,800 resistance zone, but got hammered down. And we'll see it's better, talking about the sentiment in the market there, 28. Fear, better than extreme fear. That's what we had for past last week. Was mostly extreme fear in the market, but we're seeing some confidence building there with fear right now in the market. Let's look at the market cap, $817.13 billion, is down 2.93%. We're seeing a pullback in the market this morning. Volume traded up 32.51%. That's on sell-offs we're seeing with Bitcoin and some of those altcoins there. Bitcoin dominance, 38.01, looking like it's going to get to 37, still hanging on to that 38% level. Let's look at the price of Bitcoin this morning, $16,185 there. Got hammered down this morning 2.35%. Volume traded, $25.07 billion. That's for Bitcoin. Look at Ethereum. They're holding that $1,000 mark, but it's down 3.92%, almost 4% this morning. Volume traded, seeing low volume for Ethereum this morning. It's $6 billion. This was traded. Let's look at the top alts by market cap. See BNB there, down a massive 6.11%. It did try to get above that $300 level. We're seeing a pullback as we see with the whole market. Cardano down 3.84%, and we see Matic there, 81 cents, down 4.38%. XRP losing that 40-cent level, down 4.88%. Let's bring in Olumide Additional now, financial market analyst, to bring us up to speed. Hello, Olumide. Happy Monday.
Not looking so happy. Thanks for having me, Ladi.
Yeah, not looking so happy, but happy Monday regardless. But what's moving sentiment in the market this morning?
Well, I think on a weekly basis, one should give the crypto market some resilience upside. If you look at Dogecoin on a week basis, it's up 25%, up 8%, except for the major points, Bitcoin and Ethereum, that seem to be floating on their support level. And one would still say that, well, it looks like market contagion is still in play despite an upside in market sentiment. If you look at chain analysis data, recent data suggested that a whale is moving about 73,000 worth of Ethereum on Binance. And that just tells you the amount of liquidation coming from institutional investors. Also, FTX collapse has brought in a lot of entities trying to liquidate some of their we had reports that from Turkey that authorities are looking to seize assets around the jurisdiction. Bahamas and United States are fighting on who takes the spoils in the bankruptcy filing. So all these things weigh negatively on the crypto market. But having said that, also, coming from China, where a lot of unrest, and China plays a big role in the crypto market, despite a ban. If you recall that China has one of the greatest amount of Bitcoin miners just outside the United States, and that really also has weighed on sentiment largely. So it's very difficult for Bitcoin right now to think of approaching the 18,000 resistance level. That's why it's sticking around the 18,000 support level right now.
All right, but what are you seeing, for price movement, this week? What are we expecting? We know news from the United States does, affect this market and other global news. What are you expecting this week?
Yeah, I think it's bearish for me because the United States dollar started on a strong footing. It's weighing on many currencies, and you could even see that's trickled down on commodities where food oil prices have lost more than 3%. So it really means that risk on sentiment is definitely off the table, and definitely investors try to be very cautious in the crypto market.
Yeah, a lot of caution, right now, and obviously we're seeing, the CEO of Binance there trying to build back, confidence with the proof of reserve concept for exchanges. How are investors reacting to all of this?
I think from the general view, especially from stakeholders, is that they feel that it's not good enough. They feel that for them to be integrity in the system, external auditors need to come in play. And that they feel that proof of reserves is not a true reflection about the total asset of an entity, because you need to also factor in liabilities, you need to factor in customer side. So they feel that proof of reserves is just the show of might, and you understand that Binance by far is the biggest crypto exchange in the world. So they feel that there are other metrics that are more important, and that's where I think auditors need to come in play, because it's really lacking the space. The credibility of auditors across the entities are really compromised the integrity of the crypto industry.
And how are decentralized exchanges, how are they doing right now? Because we know the main issues, have come from the centralized exchanges. How are investors, playing now? Are they moving more to the decentralized exchanges? Because we did get that news from MetaMask about, taking IP information, from users.
Yeah, that is a bit tricky, but if you look at the numbers, MetaMask has about 21 million users, while Binance has 120 million users. That's times the population of South Africa. So I think what is coming to play right now is that we're seeing sophisticated investors taking self-custody into play. We're seeing the demand for hard wallets, particularly X-Ledger, going on all-time high. And that's pretty much tells you that investors that have the know-how are trying to keep their own assets on their own. But those that really are not so sophisticated, we keep their crypto assets on the exchange. But going on, you could see that Binance still holds by far the biggest size, followed by Coinbase and OKX. But investors on the stock market, US stock market, are betting against Coinbase survival, and that's why the stock is really trading at close to 52-week low of $43, and that's pretty much telling you that investors are not really seeing much upside on how exchanges would really survive this, because many of these exchanges survive on retail investors and commission-based model, but with regulation and clear mandate on how these operations will, they feel that margins will be eroded, and that's why not really looking too good for crypto exchanges in the near term. But entities like Binance have other exposures, Trust Wallet, they have Coin Market Cap, so they can monetize all ecosystem if they choose to. But this year, right now, is what price are users going to pay?
Right, and I know Kathy Woods is still very bullish on Coinbase there, but thank you so much, Olumide. Always good to have your perspective.
Thank you, Pat.
All right, so let's look at the top gainers counter there. We see it's just CeeLo there, 64 cents, up 16% earlier this morning. We see a stablecoin USDN not looking so stable there, but it's up 1.37% this morning. TWT up 0.87%. So we're seeing single-digit gains in the top gainers counter. Let's flip over to the losers counter there. We see CRV there down 9.12%. Huobi token 8.97% down. Chili's also down 7.57%. So we're seeing a lot of sell pressure in the market. Monday morning, first trading for this week, and it's not looking so vibrant, but we'll keep tracking those markets. That's a wrap on the markets, and that's it on the program. Don't forget to join us by 1:30 on Business Incorporated. More updates and developments in the world of business. You can watch this again on our YouTube channel. Just flip over to YouTube, search for videos, and you can see all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.